know how to buy crypto, we know how to add more to our portfolio. But how do we actually take profit? How do we cash in and see some profit? Because ultimately, that's what matters. FOMO kicks in, greed kicks in, it can go higher, it can go much higher from here. And then suddenly a huge retracement driving you to a 90% bear market and you're left holding a bag. I've been there, I've experienced it, I've got the scars, and I've learned from that to build a profit-taking strategy. In this video, I'm going to share exactly what I learned and the 5 profit-sharing methods I now use to make sure I'm locking in those gains. Remember, there is no one-size-fits-all with cryptocurrency, nor profit-taking. You're going to have to use the following methods to carefully construct your own profit-taking strategy that suits your needs and your circumstances, but this video has everything you need to get started. These plans have to be made and set before you enter your cryptocurrencies, so you do not fall for your own emotions or biases. This is hugely important, and so many fall at this very first hurdle. Now, the first method is what I call when the music stops, and this refers to an investor or trader who likes to trade the momentum curve. They have an innate understanding of the different emotions and trends going on in the market, and they try to ride these trends. Now, there are 2 key types of people that do this. The first one is somebody who wants to be a trend follower. They feel like they can understand the momentum and they want to ride that momentum. They can see that there's a new project launch, there's a new update to a certain blockchain or cryptocurrency, or they can read in the social ether that Elon Musk is feeling really positive about Dogecoin, let's say, and therefore they want to ride that social momentum. So they're looking to follow the trend, and when they follow that trend, they're waiting for the music to stop, right? They're trying to sense when is that hype going to hit a crescendo such that they can take their profit and lock in their gain. And remember, you don't want to wait till that music stops, because if you're the last one and everyone's taken all the chairs, guess what? You've got nowhere to sit. Now, the opposite to this is also a fantastic profit-taking measure, and that is become a contrarian investor. Now, a contrarian investor does the exact opposite. They want to be buying when the market is fearful and selling when the market is getting greedy. But similar to the first person who's riding the trend, the contrarian is riding the same trends as well. They're trying to identify the peaks and troughs of hope and excitement and fear in the market, but they're just doing the opposite. So when they can see that everybody is dumping a token because there's some FUD in the news or there's something going on where everybody's saying something bad about this project, they're going, hang on a second, the fundamentals of this project look good. I still believe in this project. I feel like these couple of news stories are going to die down, and then eventually that wave is going to come back again to this project. So they look to enter there, but then they want to exit when the masses finally return and understand that all that fear in the first place was just FUD. Which type of trader investor are you? Method number 2, never. I'm never selling. I'm hodling, holding on for dear life. And this is a method that a lot of investors may hold on to. Now, the risk for me personally with doing so is I would never have a hodl relationship where I'm not going to sell for any cryptocurrency apart from Bitcoin. I'm at peace currently holding a percentage of my total net worth in Bitcoin forever. I'm happy to leave that portion in there and say, you know what? Bitcoin is that antithesis to traditional finance, and it could be an asset class I hand on to the next generation. But for all my other investments, my altcoins and everything else, they all have a clear profit-taking guide. I am not hodling them. I may hodl for a few cycles, but I'm not hodling forever with no plan to take profits ever. But just to say that you're a diamond hand hodler and you're going to hold your cryptocurrencies indefinitely, that is not a good game plan. Now, the key to the hodling mindset is simplicity. The majority of people who buy cryptocurrencies do not have time to be following the first method where they're riding social trends, they're being a contrarian investor. That takes a lot of pulse to read the market, understand the market, what are the nuances, how is the market emotion. For those who do not have time to do that, hodling is often a very effective strategy where they're DCing into their positions today and then looking for the peak of the next cycle in the next 2 to 4 years to then exit at a much higher position. And for that requires very little active management and yet still provides them a robust strategy that's proven to work. Now, the risk with hodling is, of course, it depends on the cryptocurrency surviving. And the longer you hodl for, the longer the chance that your project could fall into a catastrophic event that could lead to its demise. So if you're holding a cryptocurrency, for example, for 2 to 4 years, the chances that they have a situation go on, a hack, a breach, some downtime, or something happens that generates FUD on that project side, the more likely you are to be exposed to that. Whereas if you have a short-term thesis where you're riding like a trend investor or a contrarian investor where you're holding a project for a month or 2 months or 3 months, there's less chance of that project catastrophically collapse. Let's use Terra Luna as an example. Let's say you were dollar cost averaging into Terra Luna with the HODL strategy. You didn't have a clear plan to take any profits along the way. This is exactly what I wrongly did, and I shared that in that video here, which I'm going to break down for you how I lost $300,000 making this mistake on not taking profit. Now, in the case of Terra Luna, you may have been DCA buying into Terra Luna, hoping to hold it for 1, maybe even 2 cycles. It was a great project. You believed in it. You had conviction in it. And it was growing and growing steadily, but you didn't take profit, right? You're hodling. Diamond hands will take it at the end of the next bull market. But then you have more chance of hitting a major catastrophic event like we saw with Terra Luna, with UST depegging, and the ultimate demise of one of crypto's top 10 cryptocurrencies. So this is a risk you have to account for when taking the hodling approach. Method number 3, the basic stop loss and take profit. Now this method is primarily targeted at day traders, momentum traders, swing traders. But even if you're a medium-term investor with a slightly longer horizon time, you can still use this effective strategy. And most of you guys will be familiar with this. When you enter a trade or a position, and remember, it's got to be before then. You can't do this afterwards. It doesn't work. I've tried it. You fail. Beforehand, you set your take profit. What is the level that you want this project to get to? What is the goal? When you buy in today, what is your base case? This is the heuristic I like to use. How do I get my money back? That's level number 1. Then I have a base case. A base case is what is that price point for this crypto project, which if it does not achieve, I was wrong. My thesis on this project that they're going to do this update, they're going to do this upgrade, they're going to improve as a protocol, and the value should increase to this market cap. If that doesn't happen, I got the investment wrong. So I have my base case. Then I have my target case, which is like a good case. This is what I think it can achieve realistically. Yes, we need a few things to go right in the market. The market needs to move in the right direction. Maybe we need some of the macroeconomics to fall in our favor, but it's a good, solid target case. Then I have my stretch case. And the stretch case is now saying, okay, I need a few more things to align in my favor. Maybe crypto needs to start entering a strong bull market phase. There's good momentum behind crypto. A few things go right for my project, and they're updating the protocols as they expected, really delivering on their game plan, and there's some good momentum behind the project. We can go and hit our stretch target. And then on top of that, the one I will never plan for, but I'll still model out before I buy any cryptocurrency and add it to my portfolio, is the moon case. The moon case is the one which I don't plan for, but 1 in 10 or 15 in my portfolio will just hit the moon case. Because that's what crypto is about. Any coin at any given moment can have a crazy pump and narrative where it just delivers outside returns. So by spreading my bets in my portfolio and never planning for the moon case, by default, 1 or 2 projects every so often will hit that moon case and will drive the returns of the portfolio hugely. So once I've got that heuristic, now I know where to set my take profit. And my take profit will be set at my base target level. I'm going to say when we hit my base target, which has delivered me a pretty decent return, not a moon return or a stretch return or anything crazy, but when it's hit my base target, I'm going to take my chips off the table and I'm going to let the profit ride. So now I'm investing or trading with what is known as house money. My money is being preserved, right? Whatever I put down, let's say I put $1,000 down, I've taken that out. It's grown to $1,300. Now I'm leaving the $300 left in the market as house money to go and see if it can hit the stretch target, if it can hit the moon target. And guess what? There is no downside for me. If that went to 0, if that went to a 90% bear market, no problem for me. I already took my initial money back out of the market, and I'm going to go and reallocate that $1,000 into some of my other favorite plays and repeat the process. Now, if you're a trader, you're going to do this a slightly different way. Maybe you've taken my course at ejaz.uk/TA and you've learned that you want to trade a head and shoulders pattern or a descending triangle pattern or a cup and handle pattern. And you've got your entry point. You've got a clear entry point where you want to trade this move. And I've shown you how to do the measured move in that course. So you take your measured move and you apply it to the point of breakout and you get a price target of where you want to exit your trade. If the trade goes your way, this is where it should be reaching, and you set your take profit in your exchange as a limit order to automatically close your position at a profit once you hit that price target. Same concept, take profit, before you enter your trade. Method number 4, and my personal favorite, and that is known as laddering out, or in other words, the reverse DCA. This method is when I like to scale out of a position. If you guys have been following how I like to buy into my favorite investments, you will know that I'm not a binary person. I don't have one price point where I'm like, I'm in there and I'm out there. No, I do things in areas. I have an area on a cryptocurrency chart where naturally I want to be a buyer in that area. And so I'll DCA into my position. Similarly, I have areas on the chart where I'm a seller, and that's where I want to be laddering out of my position. So again, let's use my heuristic of saying that I've got a base case, a target case, a stretch case, a moon case. As I hit the first level of that price target, which we touched upon earlier, I'm going to think about starting to ladder out. And those ladder outs may be very small. I might start laddering out when we hit our base target, taking 5% off the table, taking 6%, 7% off the table, and letting the rest ride. As we start hitting my target case, I'll take more off the table, until eventually, like I explained earlier, you're just playing with house money. Now, the beauty with laddering out is twofold. On the one hand, you've cut your risk. You're taking money off the table, you've put it back into your portfolio, and yet you've still got exposure to the asset, which you obviously believe in, so you will naturally not feel the FOMO as much. So when all that FOMO and greed kicks in the market, that it's going to go higher, it's going to go higher, trust me, it's going to go higher. You've taken some off the table, but you've still left some to ride. So you're still quelling your appetite to hold that particular cryptocurrency. But at the same time, you've taken chips off the table. And now we need to talk about, what do we do with those chips? Because we've spoken about profit taking. What do? Do we take that profit and go buy a Lamborghini? No, we've got to reinvest. We've got to build this portfolio, because I'm assuming you guys want to be building sustainable wealth, right? And again, this is not financial advice, guys. You've got to do your own research. Something I like to do is move 50% of that profit taking into Bitcoin and ETH. With the remaining 50%, now it depends on what do I want to do with that. And it depends on my lifestyle at the time. If I need to spend money, which I try not to, then of course I can take it out into stable coins and I can spend money, of course. But ideally, I want to reinvest, and that 50% will go into a pot to find the next altcoin that I like. Now, there's a few different ways to scale out. You can scale out based on your personal targets. Like we said, you've got your base, your target, your stretch, fine. The other thing I like to do is I like to tie that in with technical levels. When I see on the chart we're hitting some major resistance, or maybe I see Bitcoin as a whole, which is of course a guidance of the whole market, is hitting a level of resistance, I think we could be getting a big retracement, or I see something happening in the microeconomics, then I'll look at that as a natural, nice position to ladder out some of my buys. These are the different things that I like to think about when laddering out, and the more you can tie those things together, tie your base, target, stretch, with the macroeconomics, with the technical levels in the charts, and with the market cap and fundamental analysis, you're going to get perfect areas where you can start to ladder out of your positions. Now remember, profit taking is a personal decision. Do not let anybody or even me tell you that this is the perfect way to take profit. It doesn't exist. Nobody ever became broke taking profit. Then who's to tell you that you should keep holding the project? And I'm going to share with you later in this video some carefully crafted profit-taking strategies that seasoned investors have come up with. Method number 5 is a hack that so many people underestimate, and that is the trailing stop loss. This is an amazing tool which so few are using, and you can find it on many crypto exchanges. A trailing stop loss is a stop loss which follows the price action of the altcoin. So if you're trading in an altcoin and this altcoin is now in profit and you're doing pretty well, you can ask and set the stop loss to stay within 5% of the price of your altcoin. That way, if the coin falls over 5%, you will be stopped out in profit and you will not have to take the huge retracements and volatility that can come in the market. Now, of course, you have to be very, very careful. With a volatile asset class like crypto, sometimes you get huge swings to the downside before a big move to the upside, which you can miss out on. So it's important you do not have too many tight trading stop losses. But if you're a longer term investor, it's a good idea to start putting in some trading stop losses. I'm going to share with you samples from seasoned investors of how they've crafted their own crypto profit taking strategies using the methods you've just learned. Investor number 1, can you tell us how you like to take profits?
I primarily follow a trend following approach. When I notice an emerging uptrend in a particular cryptocurrency and it aligns with my research, I take a position. As the trend continues, I adjust my take profit levels gradually, allowing some room for potential further upside.
Nice, that's cool. Investor number 2, can you share how you personally take profits?
Well, I prefer a combination of scaling out and partial profit taking. When I see a significant price surge in my holdings, I start scaling out by selling a portion of my position at predetermined target levels. This way, I secure profits while still holding onto some assets for long-term gains.
Nice, thank you for sharing. Hope you guys found this video useful. If you did like this video, you're definitely going to enjoy my video where I get ChatGPT to build me a passive income trading machine that made me money while I'm sleeping. Go watch that here, and I'll see you in the next one.